start with Ajit.
Hi, again, this is Ajit. I'm a senior associate with Opus Capital. We are based in Menlo Park. We are an early stage enterprise IT focused investor focused on the US and Israel as our target markets. By early stage, for that, that's all about leading the Series A. In some cases, the Series B, and also in sort of a few cases, the seed stage for our portfolio companies. Once we do invest, we maintain our stake in the company, so we are active investors. We try to get a board seat. We try to keep our pro rata to exit. The three buckets that we look to invest in typically are around mobility, enterprise infrastructure, and enterprise SaaS. But beyond that, we've got portfolio companies that go across the spectrum from semiconductors to networking, telecom, media, consumer, and so on. Some of the areas that we've sort of not invested in are around social and gaming, but pretty much everything else we've got some investments in. I've myself been in the Bay Area for 13 years, got a couple of degrees out of Stanford and UC Berkeley, have been an engineer for about 8 years in the Valley, started at Opus early last year, and I'm a generalist inside the fund.
I'm Eddy from Fenox Venture Capital. So we are based in San Jose, which is our headquarters, but we have global fund. We've got offices in Japan, in Singapore, and Indonesia as well. So most of our portfolio is from the US, but a proportion is from Asia, specifically Japan, Singapore, and Indonesia. So we invest diversely, but we have a focus in A rounds. And in terms of industry, we have been investing in consumer internet, in enterprise, big data, and so on. Some of the examples of our portfolio company is Sidecar, and another example is LARP, the wristband, which is a very popular category right now. So personally, I am an advocate of wearing technologies. I'm a consulting professor at Stanford University in the School of Medicine and helping to commercialize projects out of there. And we invest in A round, and we have led rounds, and we have also been co-investors in rounds. So our investment range starts from low hundreds of thousands to a few million, and we always follow on. And a differentiator about our value add to the companies is that we help to bring them to overseas markets. So we specialize in bringing US companies to, for example, Japan or Singapore, Southeast Asia, and vice versa for Asian companies. Then another differentiator is that we've got a few concurrent funds running at the same time. So when it comes to exits, there's no hard limit on the duration, like a typical 3 to 5 years. We do hand change between the funds so that you stay with the same fund. So that's it about us. Hope to talk to you guys later.
Hello everybody, my name is Avi and I'm part of Voivoda Ventures. We're an early stage fund, we're based in San Francisco. We have an office in LA as well as in Europe. Our focus is on B2B startups operating in the mobile, cloud computing, enterprise security spaces. We recently started looking at investments in Bitcoin space as well. We closed one investment a few months ago. Another thing that we're particularly interested in is Internet of Things. That's another area that we're looking at. The managing partner and the founder of the fund is a serial entrepreneur himself. He comes from out of Bulgaria, started his own company and sold it 2.5 times to publicly traded companies. And then between the two, actually we recently brought another partner into the fund. And between the two managing partners, we have done 7 exits in the last 6 years. For the last 2 years, we invested in 17 companies. We do syndicated rounds in the range of $500,000, $1.5 million. And our stake varies between the companies, but we have preference towards foreign-born entrepreneurs. One of the companies, for example, we brought from Turkey a few years ago in 2009. We funded them through our network. We did follow-up rounds, and 3 years later, we were able to make an exit. That was last year. And both of the founders actually come from entrepreneurial background. They have software development education, and one of them worked as a CTO. I'm glad to be here and looking forward for the pitches. Thank you.
Hello, I'm Sarah Cohn, and I'm an associate at Illuminate Ventures. We're also early stage enterprise investor. It's quite, I don't know if it says anything about the state of the market that there's 3 of us on this panel now, but we invest in SaaS, whether that's enterprise SaaS or a cloud infrastructure itself. We do early stage. We like to be the first institutional investors in the round, whether it's kind of a large seed round or an early Series A. Typically, it would be like a $1 to $3 million round. And we like to invest in the point where the product's been built and there's a handful of customers using it, not necessarily paying. But that's kind of our sweet spot in terms of investing. And that's all.
Okay, so that was a brief introduction for our panel, and I have 3 questions for our panelists. First of all, who in this room is an early stage entrepreneur? Wow. Right. So what do you look for? Well, first of all, how should a startup prepare a pitch to an investor, whether it's 1 minute, 5 minutes, 10 minutes, or an hour? And what criteria do you use when you evaluate a startup? Anybody?
I'm a big advocate that you shouldn't do things specifically for investors. You should do them because you need to do it for your company. So figure out what you're going to say to a customer and then just say that to the investor. In terms of what we look for, that I think first of all, just a big market is the primary thing, and then second of all is the team. It's what we look for at Illuminate, but every fund is a bit different.
Actually, we look pretty much for senior stuff. My personal advice is to be able to explain in the first 30 seconds what your company does. Through the pitches that I've listened in the past, some people have troubles explaining what value do they bring, who is the target market. Also, I think it's quite important actually to stress on the team, and also if you have some traction, that's quite important. Even if you don't generate yet revenue, the early traction is important.
On the topic, I think getting a short pitch and concise pitch is extremely important because meeting the VC who's going to fund you is probably depending on serendipity as well, right? So it's the best way to get prepared is to why not practice with your teammates, practice with your co-founders, practice with your friends. Practice with a variety of people who have the insider's knowledge or without the domain knowledge to see if they understand what's the product that you're trying to sell. So getting the pitch down to 15 seconds, 30 seconds, or be it 1 minute will be really important to explain your idea. And the other things we are looking for in a company is, of course, the team as usual, and also the traction. For a company that has a very strong team with proven exits, you do not need as much traction, and vice versa for a young team that fresh out of school, you do not have a previous startup experience, no exit, then you have to build some traction, whether is it in the form of free downloads or some other metrics that you can present to show that people want your product.
I guess a lot has already been said. I just want to sort of repeat the thing that was mentioned about the first 30 seconds or the first minute or the first couple minutes of the discussion being really important. Because I think in many ways investors look at entrepreneurs the same way that customers look at entrepreneurs, where is the entrepreneur the kind of company or the person that the customer wants to work with and pay money for. And so being able to make a good impression is important. But having said that, the objective of, let's say, an elevator pitch or a short discussion is really to get to the next milestone, which in this specific case is to get a longer discussion with the investor. obviously then what happens during the longer discussion is to get into further diligence and things of the sort, so preparation levels differ as you go along. The best way obviously to connect with investors is through referrals. So elevator pitches, etc. are I would say the second preferred medium to connect with investors, because this is really a reference driven business for everyone, the entrepreneur as well as the investor. And as far as the stuff that we would look for in a investment, the way at least we look at it is it's sort of like three legs of the stool. So there's traction, there's team, and the market. And one way to look at it is that at least two of these three legs have to be really, really solid for the investment to happen. The investors always willing to partner with the entrepreneur to fix the third piece, whether it's to strengthen the team, whether it's to get to traction if team and market are really awesome, or if you've got good traction and a solid team, then how do you take that to the next level and address a larger market or a larger problem? So think of strengthening at least two pieces of it. So if you're a first-time entrepreneur and you really don't have the credibility in the team yet from an entrepreneurial perspective, then could you get an advisor that really helps your case, or could you add other people that help you? Or if you still cannot do that, then you've got no option but to focus on traction and to focus on solving a really big problem. So think of it from that perspective, and hopefully it helps you direct.
I was a little disappointed because people should first and foremost come to my pitch events. That should be the best approach. That's right.
Sorry.
You can come back next time. So what are some of the hottest trends out there, and do you look at trends? Is that something that you consider when you're looking at investments? Anybody?
Okay, so the first thing actually we look is if there is one of the portfolio companies that we have, if it is quite similar to the potential investment opportunity. In terms of trends, I mentioned a few of them. We're particularly interested in Bitcoin, Internet of Things, and wearables in general.